when we do businesses, they always have a choice of entity as to how should they start. So there are two major criteria how businesses should be set up so that they are not in trouble in future. So we'll put it as a choice of entity. One is cost and the other is protection. So a lot of people are trying to see if they are protected if they get sued. So that's one of the major criteria they want to look at it. They also want to see if they are going to save some tax or how much is it going to cost them so that they are not in big financial trouble. So major three kinds of entities that we form in US. One is called Sole Prop. The second one is LLC, and the last one is a corp. So all these entities are on the state level. How they are formed and how they will be treated for tax purposes or protection. So sole proprietor is a person who is just doing under his own name. They can have a DBA also, doing business as, under their name or doing business as, and that's pretty much it. LLCs are limited liability companies, and under this, LLPs, those kind of scenarios also come in. And corporation is just a plain corporation. But on federal level, they are all treated differently. So on the federal level, sole proprietors are just considered form. These will be the forms that they will file. They are individuals, so they will file 1040, Schedule C. And on the LLC, it's a little bit complex. So LLC is divided into 4 sections. So if you are just a single member, then it's called single member LLC. And they also file the same form 1040, same thing as sole proprietors. The next one is called partnership. When 2 or more people are partners, then they file Form 1065. Once they file the Form 1065, then the partners will be receiving a K1 as an income or loss. The next one is called a C Corp, and the last one is called S Corp. Under a C Corp, you file Form 1120, and under the S Corp, you file Form 1120S. So these are the forms that you file under the federal. So federal will say, if you're a sole proprietor, then yeah, you are a sole proprietor. That's pretty much it. You're single. Here, LLC can be a single member, just one person. Wife and husband are considered as one unit, so they are also considered single members. Partnership is 2 people or more. C Corp is a regular corporation, and the last one is S Corporation. Under the corporation, you can have S Corp or a C Corp. So if you are not a LLC and you're just a regular corporation, you can file your tax return as a C Corp or a S Corp. In this S Corp, you have to file Form 1120S, and this is 1120. So this is just the structure of it. Here, before you file any of these forms, some of them are default. That means you have to file it that way if you are certain kind. Otherwise, you will have to do an election. So we will do a default, mention as D, and election as E. So as a sole proprietor, there is nothing else you can do. So this is a 1040 you have to file. So this is a D. This is a LLC. If you're formed as a single member, then this is called a D, default. A partnership if there are two people or more, and that is also a default for filing. Under LLC, it's complex. So they're saying you can file as a C or an S. So they're saying you have to elect. There is a special election that you have to do to to file as a 1120. Or you can do as an S Corp, and that is also as an election. But under the corporation laws, they're saying the C Corp is a default. That if you make it as a corporation, that is your default. You have to file as a 1120. Unless you do an election and you can file as a 1120S. So, few things which we have to understand here is, do you pay Social Security tax or not in certain cases? And that makes the difference as to how your tax structure will be. So, Social Security tax. Sole proprietors, whatever their net income is, they do need to pay Social Security tax, which comes to almost 15.3%. So these are expensive way of reporting your taxes. A single member also has to pay Social Security tax. Partnerships, yes. 1120, they don't have to pay Social Security tax. The corporations don't have to pay tax. But if you need to take the money out from the corporation, then the only way to take it out is by paying a salary to yourself. That means you will have to pay Social Security tax. So I'll just say no and yes. On the corporate level, you don't, but then at a certain time you will have to. 1120S is no. And I'll explain that. In a S corporation, there is a no. This one, the same thing is a no, but yes. So if you see the 15.3% suddenly increases in this, sometimes in this and sometimes in this, but never increases in these two areas. So it's taken as a dividend. So when you receive dividends from any big companies, then you don't pay any Social Security tax. It's the same concept where a corporation is making money and is giving dividends to the shareholders, so they don't have to pay any Social Security tax on that amount. Who pays tax? Individual or corporation? So in this particular case, in scenario, the sole proprietor, all that tax is paid by the individual. There is no corporation there, so no corporation doesn't pay any tax. In a single member, who pays the income tax? That also is paid by the individual through a K1. Okay, so individual, if they want to show more income in their personal tax returns, these are the best ways to go. The 1065 is also same thing as a K1. They get a K1 and they pay this. In a 1120, which is a C Corp, the individual does not pay tax. The corporation pays the tax. In an S Corp, the same thing as here. Individual will pay the tax. In this S Corp, the individual will pay the tax. And this is the only time when 1120, when the corporation pays the tax and individual does not pay the tax. Okay? So when we look at the cost or tax factor, we always see that sole proprietors at the individual level, if they have other incomes, they end up paying the maximum amount of tax, including the 15.3% Social Security tax. Same thing with the single members. When they are doing under the 1040, they also do the same exact things as here. Form 1065, because there are two partners or three partners, the actual interest, the whole thing is split. So whatever their share is, they will pay tax on it. And that also comes out to be very high under the tax laws under 15.3%. So 1120 under the Donald Trump law, they have frozen the tax rate at 21% flat. So this comes to be a little bit cheaper. However, the only issue is how do you take the money out if you are making money in the C Corp. So that's a big issue here, though it is less in tax, but you can accumulate the profits, but you cannot take it out unless you pay Social Security tax again. So it comes to the same thing. If you do a dividend distribution from the company, then dividend distributions are not deductible. That means it is a double taxation. And that's not the best form of keeping the corporation as a 1120. The only reason why big companies want to keep it is if they have losses or they have money sitting there, they want to accumulate it for bigger projects like buying equipment and all those things in future. Then it is a great way to conserve money. As corporation here again, same thing. In this case, though it is a LLC, it has been converted into an S Corp, thus they will not be paying any tax. Not Social Security tax, but just the income tax. And that also comes as a K1. So this is also coming as a K1, and this one is the same as 1120 as this. In California, under the tax laws, the LLCs are also a big disadvantage because they have a gross receipt tax, which starts like up till 250,000, there is no gross receipt tax. Gross receipt is what your gross income is. Once you start going higher than 250,000, that's when extra tax starts coming in. So under the single member and partnership, those gross receipt tax will be applicable. But under a C Corp and S Corp, that gross receipt tax will not be applicable. So the maximum tax that can increase is about 11,400. So it is a good idea not to have this structure, and this structure as far as tax is concerned or cost is concerned. You are better off having this, C Corp or S Corp, even in a LLC situation, to save some tax. One of the things we look at from the cost point of view is how much does it cost them to create or formate a company, and then to maintain a company, and filing returns and all those things. So we'll go from there. Sole proprietors are the least cost because they only have to do one Form 1040 and nothing else. Everything is reported in there. As a LLC, you have to pay at least $800 per year just to maintain the LLC, and so the same is for corporation. Even if you have loss, still you have to pay that. That is one of the things which makes it costly. And the second is you have to do some paperwork, filing with the Secretary of State, filing your other tax returns. For every year you have to file LLC tax return and your personal tax return together. So there are two tax returns to be done, so additional cost comes in. Same thing is with corporation. So cost-wise, yeah, they are more expensive, LLCs and corporation, but from the tax point of view, the S corporation is the least expensive. About protection. Now, a lot of people do create these entities just to protect themselves from sue liability. As a sole proprietor, you have no protection, basically. If anybody sues you, you're doing it in your own name, using your own social security, they will come after you. If you have your whole house, everything is on the stake now. So sole proprietorship gives no protection, right? None. Everything is you. Within these two entities, there is another one which is not a corporation kind of thing, but it is just a plain partnership, like a partnership here. There's a plain partnership where you and I want to become a partner and we don't want to do all these $800 and this and that, just become partners. That is also very much treated like sole proprietorship, and both the partners will be fully liable for everything. So under the laws of the LLC, under the state laws and the corporation, you do have protection in all the areas. If you're a single member partnership, C Corp, S Corp, or C Corp, in all these cases, you do get the protection from the state that this is a separate entity. It has a separate EIN number. So if somebody needs to sue it, it needs to sue the LLC, not the person who is a member of this LLC or the shareholder of this corporation. And that is the biggest reason why people go for LLC or corporation, and they try to see which is the best suitable for them. So in our situation, we feel that S corporation seems to be the best way, which can give you the protection, which will give you the tax break. The cost is the least because in these cases, you don't pay the LLC tax and you don't pay the Social Security tax. The only other small cost which is involved is the $800 minimum and the lawyers and accountants fees. Lawyers' fees is only one time, accountant fees every year. They have to file a tax return. All right? Any questions?